Hey everybody, so how we doing today? I'm back after my long vacation, ready to talk to you about Deutsche Bank and its brutal overhaul, which may be a sign that the global financial system is in some sort of trouble. This article comes from RT. It's a verified source, so don't be scared just because it's occasionally paid for by the Russian government. Now, when traditionally stable institutions like Deutsche Bank find themselves in trouble, it's a signal that the world's financial system will face big problems down the road, legendary investor Jim Rogers has told RT. On Monday, the German multinational investment bank and the world's 15th largest bank by total assets started cutting thousands of jobs as part of a $8.3 billion overhaul announced one day earlier. That is $8.3 billion overhaul. The bank's workforce is set to be reduced by 18,000 to around 74,000 employees by 2022, as Deutsche Bank scrapped its global equities and trading operations. The move has already impacted the bank's shares, which started to fall after initial 4% gains on Monday. The financial system is in trouble, and this is just one sign of what is going on. This has happened in previous financial problems in the 1930s or the 1960s or even the 1990s. Rogers said in a phone interview with RT. He explained the central banks around the globe drove interest rates to crazy levels. Now we have to pay the price for that. This led to what we think is a stable and sound banks start making speculative loans, and then what used to be strong banks get in trouble. Deutsche Bank's major overhaul does not mean it will not survive, according to Rogers. However, the bank will never be the same. And this is serious trouble for the lender as well as the entire financial system, the investor believes. Rogers offered a reminder that some stable banks went bust when nobody expected it, as was the case with Lehman Brothers in 2008 or with another old bank, British Northern Rock. And it has happened again. If you go to Scandinavia, you see some of those banks that have been around for years are in trouble now. This is nothing more than a sign of the times, and we're going to have a lot of problems down the road, the investor said. Yeah, I mean, when all these disasters happen and that does come ahead, it is true that ahead of many disasters, a lot of layoffs at banks occur, and there's shrinkage and even loss of entire departments. That has happened before, and I'm sure in the financial crisis of 2008, I'm sure that was also that also certain events like that did occur then as well. And I think this largely stems from maybe a possible loss of investment in the bank due to rising prices or even inflation. I know, I bet in Germany the word inflation is pretty scary. I mean, come on, in World War II, the German citizens had to go to the bread store with entire wheelbarrows full of money just to buy a single loaf of bread. So I imagine it would be a very scary word over there. They don't want to hear the naughty I word. Or does inflation start with an E, like inflation? No, I'm pretty sure it's an I. But yeah, I think this guy's totally right, at least with the historical precedent. But there could be other causes related to this that doesn't necessarily mean a financial crisis, but maybe we should be ready just in case. However, according to Rogers, Deutsche Bank is unlikely to collapse due to multiple warnings and enormous government efforts to support it. Rogers went on to explain that collapses occur unexpectedly, and it's when the global markets can crash. If Deutsche Bank were to collapse, it'd be a surprise. It would cause the global market to start to decline, he said, adding that it would create a snowball that would see other major banks follow the same path. And it would be even worse if Deutsche Bank were to see protections from the government only for it to fail. If government were to protect failing investments, well, that was one of the things that caused the Great Depression here in America, was the protection of failing investments. And if they were to do the same, given the height of this possible failing of Deutsche Bank, it could be even worse. Truth be known, if it fails, I say let it fail. If you were to fall back to the gold standard and fall on the value of gold or silver, then your country might be okay. If you fall back on gold or silver-backed currency, then you might survive long enough for stocks to recover. Because stock crashes are not permanent. They do come back up on their own. Because stock investors will find investments they think are worthy of their time and will pay off, and will be focused on those. And if a stock has crashed and no one else is picking up that stock, they might decide to invest in it because no one else is, so they don't have to compete. And then the stock will rise in value again. And they'll be like, haha, I bought that stock when it was worthless, and then I waited and it was finally worth something again. You know, it's a great tactic. Bottom line is, stocks do recover. I mean, I'm not an expert. I don't know how entirely stocks recover. I just know that there is historical precedent that they do. So this is frightening, and for a time things will be rough. But, get some gold or silver-backed currency, maybe even get some actual gold or silver in your household, and then just ride it out. That's the best way to handle any disaster. Stock up on the things you need, and then just ride it out, rather than intervene with it directly. Just ride it out. No disaster lasts forever. Actually, that's a great catchphrase. I'm going to say that from now on. No disaster lasts forever. That's cool. Anyway.